Good morning, Carl. Good to see you.
You don't own any gun stocks per se. You have some retailers like Walmart and Dick's, but what are you after here?
Really, we're after trying to get the industry to stand up and be a safer, more responsible industry. I think it's like a guest said earlier, in the automobile industry, you didn't outlaw cars, you mandated seatbelts. There are safety measures that we're calling on the industry to step up. And we're calling on every level of the industry, from manufacturing, distribution, finance, and obviously sale, to step up and be more responsible.
You say you're not making a political statement about constitutional rights, but I imagine you have to be prepared for any backlash to this, right?
Oh, there's no question about it. There's always going to be backlash. But we need to have an honest dialogue. We need to stop going to the extremes and come to the middle to more reasonable and what we think are sensible solutions and safety measures that just simply need to be put into place. The background check and things like that need to be modernized from where they are. Safety features, serial numbers to help the police identify weapons. There's just common sense things we think the industry needs to have a dialogue about instead of this separation that we have right now of one extreme or the other. Every time people mention the word gun control, sales go up. So that's not the solution. It's a dialogue, and you know, we at CalSTRS have always been about talking to people, having a dialogue and trying to bring about change. And now we have a group of large institutional investors, almost $5 trillion of assets, and I think that number is going to grow starting today.
Chris, what's the timeline for these changes, and I guess what's the methodology that you'd want to see implemented here? How would you sort of grade those changes and how they're implemented? And I ask that because I think this is a really tricky thing, right, given the fact that a lot of these gun laws and regulations are on a state-by-state level. So what are you looking for in terms of when you say things like best practices and background checks? What are you looking for?
Well, number one, we're patient. We're long-term capital. I have a 30-plus year investment horizon. I often say, as long as there are public educators in the state of California, we're going to own many of these stocks. So if you have that long-term perspective, I'm going to stay at this time and time again. We're not going to give up. We're not going to expect change overnight. But I will say that when social media kicks in, when students, when the nation gets active on this issue, I'm amazed at how CEOs respond. So we want to have the dialogue, and in those moments that CEOs are really ready to listen and have a talk, I think there's some common sense things can be put into place. So we're going to stay at this. Our board adopted firearms as the #1 engagement issue for us for the next 5 to 10 years. So we're going to stay at this and stay steady. What am I looking for? I'm looking for more institutional investors to rally around this and to have that dialogue with this industry, to give CEOs practical things they can implement that are realistic and I think balanced, that respect gun owners' rights, because there are gun owners that are responsible and want to see this industry take up a more responsible stand, a safer, better product.
I think viewers understand that, Chris. We'll keep track of that initiative. Meantime, broader 30,000 feet here market chat. We're running into all these conflicts between fundamentals and whether it's the dollar or Powell or trade or peak earnings growth versus what should be a good seasonal time of the year. I mean, does Santa show up here or not?
Yes, Santa does show up. I think you are going to see a bit of a Santa Claus rally. But clearly there are concerns all over the world and in the USA. You've hit it on all the time. This market is quite long in the tooth. It doesn't die, but people worry the Federal Reserve could kill it or presidential tweets could kill it. I think that as long as the economy's healthy, I think we're going to have a very strong Christmas season. We're looking out into 2019. And again, it's back to that slow, steady climb of a market. I wouldn't expect huge double-digit returns, but I think we'll still have at least a fairly positive tilt to the market. Volatility is back and here to stay. So gone is the early 2017 where the market was flat. We're now in a roller coaster environment where when it drops, as the old adage goes, it drops down the elevator shaft, but then it climbs back up slowly a set of stairs. I know we're a bit defensive, tilting, I guess I would say, defensive. And I think a lot of the peers that I talk to are also a bit defensive in this market, worried about that volatility and worried about the downside.
So Chris, before I let you go, when you say that you're a little more defensive tilting, does that mean that you're making changes to asset allocations? Are you still 53% in equities, for example? Or are you looking at bonds increasingly or something else?
Well, Margaret, I always tease you guys, we're not fast money. So we're not going to be on Melissa Lee's show. We're the opposite. We're very slow, patient money. And my best analogy would be we're going to stay focused in on equities. We're not going to radically shift that asset allocation, but we're going to tilt, or in this case, batten down the hatches a little bit and prepare for rough seas. So we are shifting a little bit away from equities. I'm not going to call out our trades live on TV, but we're tilting toward what we think are a little bit more defensive strategies, taking profits where we can. Clearly, the real estate market is priced to perfection. Looking for a few opportunities, but I think everybody recognizes there's very few parts of the world that are cheap, and the parts that are make you a little bit nervous because there's still more story to play out there. So it's a watch and see. I'd recommend for retail investors to rebalance their asset allocation. A lot of them have probably find themselves overweight equities. It's a good time to rebalance, and again, the key word is balance. Stay balanced in your investment portfolio.
Chris, always good to talk with you about the markets. We'll see you next time. Chris Ailman with CalSTRS joining us from Sacramento.